Good evening and welcome back to Be Rich. After Bahrain, my team had a brainstorming session. The idea was where to do an event. So we thought we had done enough in Gulf and we'll take a switch. So the team decided to do an event in Singapore. We are going to do an event in Singapore in the last week of August. Those desirous of meeting me in Singapore can send a WhatsApp to the number given below or drop a mail. My team will be in touch with you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about the Japanese yen and Japanese companies in general. And we're going to be seeing what is exactly happening with the currency. Why is it getting battered? And why has it made a sudden recovery over the past week or so? All this will be covered in today's video. And let's start off. So there is some suspicious news with what's happening with the Japanese yen. The yen, which has been depreciating for quite a while, for 37 months now, has suddenly had an uptick. And this uptick has come in three main phases on 3 different days: the 11th of July, 12th of July, and the 17th of July. So then the question then becomes, what is exactly happening with the yen? Because it's come in these 3 blocks, and generally when currencies are traded in blocks, that such a large block such as this, it generally means that there is some sort of manipulation which goes on in the market. And there are a few candidates for this manipulation. The first candidate could be the US Central Bank, which is actively selling its US dollars and buying up the Japanese yen. That could be one case. 2, it could be some company, some huge company, because this is being bought at a huge size, is buying yen in bulk and selling US dollars. But that's probably not the case. And thirdly, it could be our key suspect, the Bank of Japan, which is supposed to be the central bank of Japan, and it's supposed to regulate, or rather maintain, currency exchange rates as per the macroeconomic policy which they wish to pursue. So let's look at the data and try to piece together what's happening. First off, the yen is at 156 yen per dollar. So 1 US dollar will fetch you 156 yen in the exchange rate currently. And this number is marginally above the 37-month low. Secondly, according to financial data, the Central Bank of Japan has sold over $3.5 billion of forex reserves on 11th and 12th of July. We're not sure what happened on 17th of July as of yet, but preliminary data tells us that the 11th and 12th of July has most likely seen the Central Bank of Japan sell huge amounts of US dollars from their foreign exchange reserve to prop up the yen, supposedly. The total sales, if you add this $3.5 billion to the tally, the total sales of US dollars in the market in exchange for the yen has been $120 billion in the past 2 years. This is a significant amount. The yen's weakness is explained, of course, by the disparity in the monetary policy followed by both the countries, being Japan and the United States. We all know that Japan has long suffered a bout of deflation, which it has been fighting tooth and nail over the past few decades. And we also know that the US, after its ultra-loose monetary policy, has risen the interest rate quite a bit to a steep 5.5% as of today, without any cuts which we may or may not see in the future. That being said, the Bank of Japan tried to follow an opposite trend by cutting their interest rate, and they also like to maintain a free flow of capital. And today what we end up seeing is that the Bank of Japan, or rather Japanese yen, is now depreciating against the dollar, or has been depreciating for a while. And it continues to, apart from this sudden increase we saw in the yen's valuation against the dollar due to the Bank of Japan's activities in the market. So, why does the yen have to depreciate just because the US dollar is facing higher interest rates? It's as simple as this. Investors in Japan see more value in parking their money in the US because US equities and bonds offer greater returns now, or theoretically offer greater returns because of a higher interest rate. And this is true because we see that the bonds in the US are definitely offering more yield than the bonds in Japan. So some companies and big investors have decided to park their money in the US, which means that the yen had gone for a toss for quite a while now because they were pursuing a loose monetary policy to keep the generally cold water which they have simmering because they saw signs of inflation. Right. And however, in the recent past, the Bank of Japan has tried to reel back their loose monetary policy and have tried to engage in some rate hikes. They've meddled with it. They're just trying to, dip their toe in the water and see what tight monetary policy might feel like. And they've started raising their interest rate. But regardless of this, we see that the yen has still depreciated. And even between the difference in the yield between both the 5-year US Treasury and the 5-year yen government of Japan bond, we see that the differential between the interest rates have come down by over a percentage. But even then, we see that the yen has depreciated by over 4% during this period. This is puzzling because we're supposed to see the yen slowly start seeing an appreciation against the dollar when news of interest rate hikes in Japan are announced. But it's obvious that the very minimal interest rate hike which they've just done is not enough to create enough of excitement about Japanese treasuries, as the US treasuries are already enjoying quite a huge flow of cash to their coffers. However, we see that there's another reason at play. Another reason is that Japan being a net exporting country. Some of you at home might wonder, wait, if it's a net exporting country, doesn't that mean people have to buy yen in order to buy goods with that same yen? That's a good point. However, Japanese companies being net exporters and having high interest rates in the US, they're keeping the profits in the US. So Japanese companies are taking their excess profits and they're parking it in US treasuries to get a good return on it. All of this started with the late Shinzo Abe's corporate governance reforms, where companies have moved more towards returns on investments rather than holding random holdings of different companies within the Japanese stock market. This used to be the norm, but today we're seeing a push towards competitive returns on investments, which companies are pursuing. And this has propelled Japanese companies to make a lot of money by parking their profits, which is their surplus. They're parking it in the US and they're never bringing it back. And if they don't bring this money back, this basically means that it doesn't affect the exchange rate at all, or barely does. There is an estimate which says that only 1/10 of their 37 trillion yen surplus has been brought back into domestic shores. The rest of the surplus is parked in US securities well abroad. And this has basically meant that the Bank of Japan and the Japanese currency, which generally sees some relief from its net surplus in the trade balance, they're not getting that second wind, or rather that relief today. Instead, the Bank of Japan is resorting to methods such as selling their already pre-existing forex reserves in order to meet the yens, or rather stop the yen from falling further. And unless the Bank of Japan either increases interest rates further and in a greater degree, or forces Japanese companies to bring back the money which they're making abroad, it's going to be difficult for the yen to see its current uptrend through. And what do I mean by that? I mean that it's going to be difficult for the yen to go back to where it was against the dollar anytime soon, which means that tourism in Japan is still going to be cheap for those who want to do it from the US and I suppose other countries with a strong currency as well. And another thing which is plaguing the yen is the fact that there's very minimal foreign direct investment, with Japan investing more abroad than people abroad investing in Japan. And this deficit has come up to $178 billion, where this is the excess of people from Japan investing abroad compared to people from abroad investing in Japan. There was this one oddity where TSMC said they wanted to open a factory in Japan. But today we see that at least seemingly a standalone event, because with Japan's aging population, it's going to be, and language barrier and cultural barrier, it's going to be very difficult to entice overseas companies into investing into Japan with their sticky investments. So, what all of this basically means is that the yen is still set to underperform the US dollar as things stand today. And unless the Bank of Japan pursues a different policy, or the government of Japan decides to come up with a different regulation, this problem may seem to continue to be at hand. What do you think about this?
Well, I agree with you, but all of this depends on what happens in the American election, because even the Japanese are sitting and watching, like the rest of the world, to see what's going to be happening at the end of this year in the American elections. If Trump comes to power and his ideas come to fruition, a lot of things for Japan the way it is has to change. And you see Japanese companies and businesses pivoting like that, like Mike Pompeo, the last foreign minister of US, foreign secretary as they call it, has been hired by a Japanese steel, Nippon Steel, to help them land better deals in the US. So they are pivoting because nobody is sure if it's going to be Biden or Trump who's going to be sitting in the White House. And these currency movements will also have a huge seismic shift based on who's sitting there and their ideas on how the currency should be traded and where there should be a strong dollar or not. Like Trump doesn't like a strong dollar. We said that in the previous video. And if Trump comes inside and he takes a sledgehammer to the dollar, or he demands that sledgehammer be taken because he can't physically do it himself, he'll have to ask the Fed to step in. And if it doesn't happen, I mean, the dollar becomes weaker, then it changes a lot of things. And if Biden comes back to power, if not Biden, whomever the Democrats choose to be, and they manage to win, I think the strong dollar will be there to stay for some time. There won't be any major shift in the policies. If that happens, then what you're saying also holds very true. So I feel it's a wait and watch game. But as an Indian investor sitting here, I still see, like we were discussing off camera, there's lots of opportunities in Japanese companies per se.
Yeah.
And those companies, opportunities continue to be there. Though yen and government of Japan and the government of United States, their policies and all that has effects between them and exports and trade balances and all that. But as an investor, where we are sitting, we are only looking at companies, and companies which are able to move and pivot and export and bring back dollars to Japan. And I think that's still very vibrant, and it still stands good to invest in Japanese companies which are exporting or bringing in a lot of revenue into Japan in terms of dollars. And I think that is going to change anytime soon.
And as the this thing is, it's easier to weaken a strong currency than it is to strengthen a weak currency. And Japan can at any time decide to strengthen its this is paradoxical, where Japan actually has the power to strengthen its currency whenever it chooses. It just needs to take away free capital flow, which currently it does have. And like he said, if Donald Trump comes into power and Donald Trump decides to put in trade tariffs and stuff, that basically harms Japan quite a bit because it is an export economy. And that will force Japan to retaliate against its very old ally, the US. And we might end up seeing something else happen to Japan, where money has to be brought back onto domestic shores, even without the Bank of Japan even touching its interest rate. So even if that happens, it's going to be interesting to watch, to say the least. And yeah, that's about it for this video.
Yeah, and just wanted to add in saying that, yes, the world is training protectionism. Everyone's putting up their walls and borders. But we as human beings in society cannot function like that. This protectionism and this kind of cold, warm war we're all fighting will simmer. Maybe it might take 5 years, 10 years, but it will simmer down. And logic will prevail, because not any country can produce everything it needs internally and say everything will be self-sufficient and not need anybody.
This is basic economics. It's Ricardian theory of advantage, comparative advantage. You have to engage in what you are good at doing, and you export it to people who are not so good at what you do, and you purchase or take something in return for that. It's something which people understood 400 years, 500 years ago in economics. And it seems that we continue to struggle with people who think that putting up walls is somehow more efficient or better for you, when basic economics tells you that the larger the market, the more efficient your outcomes and the better allocated your resources are.
Correct. And we all have to find out ways to means to pivot and to grow in an environment which is more open. But I guess this is a transitory period where the world has to go through this, because I do feel what is holding the world, choke holding the world right now is the vestiges of old way of thinking. It's a last hurrah for them. So it seems that's what seems to be happening. Because the younger generation, your generation, seem to be far more progressive and far more open-minded about all this. And their outlook is very different compared to people who are older than me. So I would say in 10 years' time, they will all change very dramatically. Because days of Trump and Biden will be far over by then.
I agree. And with the internet, it's very difficult to identify with a single niche which is embodied by your domestic borders. It's more of a global village, as people say, where you find your niche amongst people who are American, French, Pakistani, even Bangladeshi, Indian, Vietnamese, you name it. It's a global village. And let's wait and watch to see what happens in the next few decades.
And this is true in Japan too. That's why Japanese government is actively pushing and encouraging people to move to Japan and live in Japan and work in Japan, because they've realized through a lot of hardship that trying to be a homogeneous society hasn't been very great for them. Yes, there are problems in that when you open your borders and cultural old ways of thinking change. But that's the way the world goes. Anyway, this has been an interesting conversation.
Right. Thank you for watching this video. If you enjoyed it, please like and subscribe. Please share it with your friends and family members if you think they have some value to take out of this video. If you have any suggestions for us, any comments, funny comments, anything, please leave them in the comment section below. We'll make it a point to read your comments, and we hope to see you in the next Be Rich video. Thank you.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.